All right, our Sreesankar joining us now from Prabhudas, Lilladher. Sri, thanks for being with us. Markets seem to be a little bit more cheery than we've seen in recent times. Sri, the last week or so we've been faring pretty well. Have you also sort of revised your outlook? Are you feeling a little bit more positive on the way forward?
Yeah, it looks like all on a sudden the negative feeling that has been there in the market has lessened a bit. Probably a feeling is coming from the way the job numbers have come from the US, not very strong, so people will still expect probably sub 2 lakhs, and then whether there will be an increase in rates, it's again another question mark. But all in all, I don't think that it's going to be extremely positive for it. So my thought process, people will see how the quarterly results are going to happen, number one, and number two, how the earnings guidance of companies are going to be there, because we have already seen our earnings estimates come down for the Nifty from 470 at the beginning of the year, or at the beginning of April, May, towards 436, and now as we enter the result season, so I'm looking at how the earnings estimates of analysts are going to turn out to be, and which is going to be a function of the commentary that they hear from the corporates.
Right. Sri, we're also watching out for earnings now. What are your expectations this time around? What are you hoping to see during this set of earnings? Any particular pockets that you'll be focusing on?
See, our estimates is effectively you're going to have probably a positive flow from IT. IT is going to be the sector which is going to give a great amount of positive thought process in terms of earnings, and that's what our expectations are. Anyway, we'll release a pre-quarterly estimates, etc. by tomorrow, so we'll have everything out there. But our expectations, looking at how the first quarter has turned around, and the only segment where we have seen earnings estimates revised upwards is in IT.
So let's talk about IT a little bit more in detail, Sri. Apart from a warning from HCL, as you said, some expectations that we'll see a pickup this time. Any particular stocks, or where really do you feel that that expectation is coming from? Where do you expect to see them perform?
2-3 reasons. One, there is a tailwind in terms of currency depreciation, rupee depreciation, which should aid. That's number one. Number two, on the constant currency basis, we expect, and we continue to believe one of our topics, which is Infosys. Infosys should lead. That's the second part. Third, again, last time around, probably you had TCS at around 3.5%, so probably we think that it should be much above this time, to closer to 4.5%, and that's where the lead is going to be there. And most of the companies have also undertaken a salary increase, which would have already got affected, so that's also slightly out of the way, salary increase, and as well as visa cost, etc. So in general, on a totality, you should see IT beginning to do well, or rather continuing to do well.
Okay, let's take a look at what else we're seeing in terms of trends. Sri, we've seen the entire commodity pack also start to see a rebound. Let's just take a look at the metal space. Vedanta up 5% today. Hindalco's up about 4.5% as well. Tata Steel is seeing gains. Do you also see strength? Do you see any value in investing in these stocks at this time, given how how badly they've been beaten down over the last few months?
If you look from a value point of view, there is definitely a value. But are we going to see recovery happening in the metal space in the near term? The answer is we don't have an idea right now. The simple reason being, the scenario looks fairly down, and unless you see a recovery happening out there, the global commodity space will continue to remain in a no-go territory for a lot of investors. Because unless you see a strong recovery happens, we shouldn't forget one thing. At the end of the day, crude, the oil, is actually a consumable, and many of the commodities are not consumables. They actually go into a lot of capital goods. So unless a lot of recovery really happens in terms of a global economy, the chances of recovery in global commodities on a sustained basis, it's a long call. The current bounce back, I would rather look at it and say that the way these stocks have got beaten down is so high. So it's natural to expect some bounce back as and when probably there is a bounce back in crude. So probably there will be a bounce back in some of the other metal counters, some of the other commodity counters as well. That's it.
So let's take a look at oil as well. I mean, ONGC, Ken, they've been seeing some fantastic moves in the last couple of days. ONGC especially. I just want to get a call from you on some of these oil and gas majors too, Sri.
See, we like in the oil and gas majors, effectively our great preferences for IOC. We like BPCL, HPCL and IOC, but our preferred pick in that segment continues to be IOC. And in the current environment, oil marketing companies are better, and though on a relative basis, IOC has underperformed. There was a stock overhang of 10,000 crores off of a sale, etc. That's out of the way. So we believe that OMCs are the better place, and within OMCs, Indian Oil Corporation is our preferred pick.
Okay, what are you making of the Tata Motors currently? Sri, I'm going to separate that to the rest of the auto pack. We'll get to that in a moment. Again, a lot of fundamental concerns, but the stock has, seems to be recovering over the last few sessions.
Yeah, and in fact, Tata Motors is a part of our topic. The stock has corrected and corrected sharply, and there is a fear that the kind of issues that is there in China will result in a large amount of slowdown for the company, and the stock has been seeing some selling as well. But we still believe that it's a case wherein we have seen the company oversold quite a lot, and we still continue to remain optimistic on the global scenario for global outlook for Tata Motors.
What about the rest of the auto pack, Sri? Given that we're just ahead of festive season as well, we've seen a whole slew of rate cuts, which we're of course hoping at some point will filter into demand. What's your take there?
Our preferred is Maruti.
Right. Okay, and what about, since we're talking about rate sensitives as well, let's talk about some of those housing finance names too. We've seen, like I mentioned, a whole slew of rate cuts coming in across the board, most banks passing that on now. Do you expect to see that translate? Are you bullish on any part of that ecosystem, whether it be the housing finance names or the realty names? What's really attracting you at the moment?
See, the way, to me, it's more sentimental than anything else to a great extent. That's number one. And number two, the rate cuts, if it's passed on immediately, on the asset side, it takes effect immediately. But by the time it gets translated into the liability side, it takes a lot of time. So that will, in the shorter term, impact these companies, everybody, in terms of a slight compression in terms of NIMs. That's the second part. And the third side, if you really look at it, what is it indicating? Indicating, I think, clearly for the housing finance companies, etc., things looks too good. Looks better in terms of their demand pickup if it happens, and that's going to be the key. I don't think that you're going to see a large amount of stressed assets in terms of self-occupied houses and so on and so forth, and especially in cases where the LTV, loan to value, is actually on the lower side. So housing finance companies are relatively the better quality of the entire product profile or asset class that you have, where I don't think that you need to necessarily take a lot of write-offs, even if you assume that if stress gets into that. In the current environment, we like the HFCs, but it's only a question of whether you think the current pricing or whether it is expensive or not. That's it. Otherwise, from a fundamental point of view, HFCs looks good.
Okay. All right, Sri. Thanks so much for joining us today. We'll leave it there.